Welcome to Serious Coin. I'm Kelly Willis Green, and this is the podcast where we have rich conversations about wealth. And today we're talking about women and wealth, because women control something like $34 trillion of assets worldwide. But you wouldn't necessarily know it from the way investing is usually discussed. And in this episode, my guest is someone who wants to rewrite that story. She's Barbara Stewart, a former portfolio manager, global researcher, and founder of Rich Thinking. And every year on International Women's Day, she publishes a report on women and finance. And her research challenges outdated myths with data, stories, and global trends. Her latest research report is Women and Alts, a Global Perspective. And it reveals a striking gender gap that you may or may not find surprising, that men put twice as much of their portfolios as women do into alternative assets. Things like private equity, hedge funds, real estate. And Barbara and I talk about why that gender gap exists, what can be done to change it, and how women can claim more space in that part of the market. She also shares an unfortunate family experience that sparked her mission to change the conversation about women and investing. Barbara joined me from her home in France and told me about the moment back in March 2009, you may remember at the height of the financial crisis, when she decided something had to change.
The day of the low of the market, I think it might have been the day before the low of the market in March of that year, I received 7 panicky phone calls, and they were over the top panicky, get me out, this is terrible, I can't handle it anymore. I noticed that they were all men in the family that were making these panicky phone calls. And I fortunately was able to talk each of them out of it, or at least to sleep on it. And by the next day, they were calmer. However, when I went home that night and I went for my nightly run to stay sane, I realized there's something to this. And it made me really think a lot about these stereotypes about women and money. And in particular, the one that always got to me, which is women are risk averse, apparently. So I spent some time with holding that thought. And then one day it just occurred to me that the best way to counter a negative stereotype is with a very positive story. So I got the idea to interview 50 super successful investors, female, around the world, and share their stories in a research report. And it's just sort of took off from there. That's a whole story in and of itself.
So, but going back to that time when you were a portfolio manager, what other attitudes and behaviors did you observe, differences between your female clients and your men clients?
Well, the primary one, when I was working as a portfolio manager before I'd done any research on this topic whatsoever, was this disconnect between other stereotypes that I'd heard, that women weren't interested in investing and that women would defer their authority to their husbands or their brothers, or that women just weren't smart enough to invest, or one of these things. And along the way in my career, I realized that this disconnect was huge because my female clients were so smart and so capable and often had much better results if they had a different asset mix than their husband or partner. And so time and time again, it just really fueled my desire to correct this situation, if you will. I just kept getting, really angry because even in, the workplace, and I'd worked for banks, I'd worked for different investment firms over the years, that even in the workplace, women and men would perpetuate these myths, even the professionals. So I think, I just knew we could do better and that there was work to be done on this.
So you were seeing within the subset of your client base, female investors who were in fact not risk averse and reasonably confident. And so that's kind of what you set out to prove in your paper.
Exactly.
It's interesting because there have been a lot of stats done on this, a lot of research, which suggests that women may not be more risk averse, but certainly take more care perhaps in doing due diligence before they make investments. Certainly I observed that in the relationships that I had with female clients back when I was working for a private wealth management firm, albeit not as a portfolio manager. But certainly I felt that when women called up to inquire about our firm, they had a lot of questions. They'd read every page on our website. They really did a lot of work. And I don't know whether that's to counter, this feeling of, oh, I need to know more. But that did lead to your first research paper in 2011, released on International Women's Day. And you had done this global survey, I think, with Angus Reid of women to look at what the differences were between how they felt about their capabilities and what they actually did, and whether, in fact, there were differences.
Well, I
Now, I know that's
realized
a
that
long. Go ahead.
I realized that, maybe there was something to the stereotype. Maybe we came by it honestly. So I really did want to do the research on that as well as just what I personally believed. And so, it was digging into that and realizing that the majority of the surveys done by banks and research institutions, I read every single one of them, believe me, globally, the questions were inadequate. And I think they were self-serving for some of these institutions to come up with this idea that women were not confident as investors.
Interesting.
And oh, we can help them because they're not confident, and these meek individuals who don't know where to go for help. But if you change the survey questions, which is what I tried to do, and really broaden them and give women much more choice about how to answer, because women will say, I don't know, if there's an I don't know answer, and men will not say, I don't know. So it can really skew the results. And I've learned a lot about formatting of surveys, as well as doing a bunch of commissioned research in the same type of realm.
Fascinating. So I know it's a long time ago, but what were some of the key findings that came out of that survey that would still be germane today?
I think, it really proved that we tend as women to be on the self-deprecating side. And one of the reasons I try hard over the last 15 years to change the language that we use about ourselves is that, because taking something as simple as, oh, I'm risk averse, and changing it to I'm risk aware, well, that's a world of difference. One of those is an incredibly positive skill set. And doing that due diligence that you mentioned, doing our homework, really wanting to understand something, an investment opportunity. We want to have a relationship to an investment opportunity before we're going to do it. But this is great because, as you know, women make the most loyal clients. If you get a woman as a client after she's done all of this homework, she's going to stay with you forever. And I really had that experience with my female clients, taking the time to talk with them and answer every single question that they have. And they're smart. They don't want to just buy something because their friends are doing it.
It's interesting, though, you mentioned this self-deprecating, because I do see that in my wealth coaching practice that I find, and sometimes it's in jest. People make a light comment. I even myself, I always call myself the contrary indicator as an investor, and that
Yes.
the research firms should just follow my investment behavior, and then whatever I do, as an indicator, the markets are going in the opposite direction. But I think, and part of my role in coaching is I try to broaden what it means to be a good and confident investor. And so I ask my clients, are you a good listener? Do you have common sense? Do you ask probing questions? Do you have strong emotional regulation? I think that's, probably the most important thing. And so I think part of it is broadening what it means to be a successful investor. You don't have to have a CFA and speak all of the jargon. Do you
Totally.
agree?
That's good work that you're doing, and such important work to have those, to ask those questions and make it just a much bigger thing and a more real life thing. Because especially for women, as you know, family life is central, whatever that family looks like. And they can be really complicated families or really straightforward families, but all of the considerations for investing, that's a big part of how they're going to invest and why they're going to invest, as you know.
Exactly. And also to know that it's okay to make mistakes. Professionals make mistakes. I worked with, rock star fidelity fund managers and institutional money managers, and they make mistakes, but they try to use that experience to, sharpen their process, set investment rules, and hopefully not make the same mistake next time.
Exactly. And we do tend to be perfectionists for sure, but that can work against us, right? So the most important thing, of course, is if you haven't got started investing, to just get started and try not to be perfect at it. And yeah, don't use all your money if you're just starting, but have a
Exactly.
practice account maybe.
That's why we diversify. Um,
Yes.
you've released a more recent paper. You've released a paper every year since then on these topics of women in investing. But your most recent one, I understand, is a piece of research you conducted for Kensington Capital, an alternative assets manager on alternative assets,
Yes.
called Women and Alts, a global perspective. And I want to jump into that. But first, maybe just to do a little table setting, could you define alternative assets and why people invest in them?
Well, alternative assets is defined differently by anything that you read, and you can just Google it, and you'll see everybody has a different idea of what alternative assets are. But essentially, my definition would be anything outside of public market securities, like plain vanilla equities or fixed income securities. And so that could be anything from private equity to art to wine to infrastructure assets, private credit, private debt, you name it. So in that paper, I have the top 10 alts that are of interest to women and the top three investment sectors that are of interest to women. So it was a really interesting project to work on, but I'll tell you how it came about, because it was trying to fill a need, a gap in the marketplace that I noticed globally. The year before, I had done a white paper called What's in Your Investment Portfolio? And I'd interviewed 50 people, men and women around the world, about what's actually currently in their portfolio for whatever reason. And I found out through that study that twice as many men had exposure to these alternative assets.
Right.
And I thought, what's that all about? And it was like a stark number. And alternative assets traditionally have higher rates of return. They're low correlation with the rest of the portfolio. So it's a great way to diversify. And so why shouldn't women have access to this wonderful, high returning alternative asset class? So I decided to propose the idea to Tom Kennedy, actually the founder of Kensington Capital. When I showed him this, I said, can we go look into this? Like, why don't we do some commissioned research together? And he said, yeah, great idea. So that's how that research paper came about.
So when you ask the question, why is there this gender gap? What did you learn? I know that there are a number of factors, but top two or three reasons.
Well, I interviewed a bunch of different finance leaders around the world so I could get super diverse opinions on this, because obviously, depending on who you talk to, the reason might be a little bit different. So I went with all of the pros, but from different categories. So I talked to traders, I talked to institutional salespeople, I talked to academics, management consultants, economists, CEOs, anybody in the industry at a very, very senior level, so I could get their view from their country or city and what we were seeing from there. And then I put together some themes about what was working in terms of attracting women to the alts class, and then what wasn't very effective in attracting women to the alts class. And that was a huge study and a huge amount of work, but across the board, I mean, obviously there are global nuances based on different
Yeah.
regulations, different political environments. I mean, not all cities and countries operate the same way, especially in the capital markets, as you know. But sort of the things in common all around the world that were working for attracting women to the asset class, we're taking the time to fully explain the product. And that's what we talked about earlier, right?
Right.
Just women want to do their due diligence, they want to do their homework. So communicating in a style that makes sense to a very smart woman who wants to figure it out before she makes the investment. That was the number one thing. And unfortunately, it's the number one thing that's also missing, that's not working very well. So
But
huge.
you would think that's one, look, I'm putting on my marketing hat now, I guess, but that's also the easiest thing. Should
It
be.
is the easiest thing. The problem is it's time consuming, right?
Yeah.
And so the big opportunity is with the advisor-client relationship. And of course, this depends on how our advisors incentivized, all of this. I mean, this whole system is set up in such a way where sell, sell, sell. It's not so much about explain, 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 and time's ticking, and you're not going to make your
Fair
quota,
enough. Yeah,
right?
and in fairness to advisors, if I have an opportunity and I have somebody who's already familiar with alternative investing and, I can just call them up and say, this is what I think, and they say yes, and we go ahead, I'm done. I don't have to
Exactly.
invest the time. So,
Right. So that's a bit of an issue. And the other thing is that the network effect, I found this was
Mhm.
across the board, is really lacking for female investors. And also, we don't necessarily want to operate with just a network effect. So, not to generalize, but I guess I will just, a guy might say, I'm in. Are you in? Here, I've done all
Yeah,
the research. What do you think? Yep. Okay, good. If you've done the research, I'm in. So is this guy, this guy, this guy, this guy.
right.
And a woman is less likely to do that, number one, because she wants to do her own homework. And number two, she's less likely to do it because we don't have as many networks. They do exist, but they're just coming up now in terms of that whole avenue is opening up for women, the
And
networks.
my sense is when women have networks or constructed networks, there might be an investment group. I find just based on what I see, the men just sort of have these, you know, informal networks for
Exactly.
deal flow, and they're just talking about it at breakfast, and it's just more natural.
Right. It's a totally different way of operating, I would say. And I heard that everywhere I went around the world.
I can also say again, I've made mistakes investing based on who else is in the deal.
Sure.
It's
And
not
that's why
necessarily
I'm
the
risk
best way to
aware,
invest.
right? I mean, we're risk aware for a reason.
Well, and I want to come back to this risk aware. I love that term. So thank you. I don't know whether you coined it or someone else did, but it's really good. Risk
My
aware
famous
versus
slide
risk
is
aware.
women aren't risk averse, they are risk aware. And that was
Yeah.
my most tweeted slide all around from this
No, it's great.
research.
And I want to quote someone you interviewed from the paper, which I think says this, and it's amusing, but it says it all. And it's actually a quote from a man who's quoting a female colleague who used to sell venture capital investments. And he says, her impression from sales is that if male customers know 20% of what they should know about the opportunity, they think they know everything and they'll invest. Whereas if her female customers knew 80% of what they should, they felt like they knew nothing and didn't invest. It just says it all.
Yeah. I mean, not obviously in 100% of cases, but certainly
Obviously.
that's one of the things we hear time and time again.
Well, I thought it was cute. When
But
women
I must
do,
say, I have to harp on this. It's not lack of confidence. That isn't the reason women don't invest. It's because we're risk aware and we want the information. It's not that we're not confident. We are capable, as capable, if not more capable, as men at investing.
and do women believe that?
Yeah, you have to research the people that are successful, obviously. So my research is completely biased in that regard because I'm trying to counter negative stereotypes. So I'm
Right.
only interviewing super successful women and men around the world to find out, what are these qualities that we can run with and influence maybe women that aren't there. I'm sure tons of women and men that are not confident investors out there. But I'm trying to give the information that will help change the narrative so that we can leave better messages for the generations to come and help them realize that we're just as capable as men are. There's no difference.
Right. When women do invest in alt, they invest across the board in many industries like men, but there were two that showed up as being of particular interest to women. One was healthcare, and the other femtech, which is a subset of healthcare, I guess.
Yeah.
Women's focus on women's sexual health, reproductive health. But there was another area that came up that might surprise listeners. It wasn't widespread, but defense spending.
Yeah, that was the number two sector of interest to women last year in these interviews. And, I'm pretty sure it has something to do with the environment there that we're dealing with geopolitically. But people are interested in saving their families for sure and saving the world, of course. But also, there's a money-making opportunity. And we've just seen, I mean, I did this research in the fall. Subsequent to that, we've seen a huge upswing in defense stocks, and it's just going to get bigger and bigger and bigger by the look of things. And you'd think that's not really, traditionally we think women like ESG types of investments. We want to invest in our favorite causes and concerns. Some of my earlier research certainly corroborated that. But I found out these days, yeah, we'd like to still invest in our causes and concerns. We also definitely want to make money, and we also want to participate in skyrocketing sectors such as defense.
And you don't have to make a choice,
You
right?
don't. Yeah, you
They're
can
not
do all of
mutually
it.
exclusive.
Exactly. So we've had I think, a little bit of a rebrand with what does defense mean. It used to be under the category of sin stocks like
Right.
tobacco and alcohol and all of that. And now it's like, oh, defense, that's good. It almost is ESG.
So if a woman's listening to this podcast and is intrigued by alternative investments, what advice would you have for her?
I would read the white paper because there's a ton of information in there, and there in at the back of the digital version of the white paper, there are 52 full commentaries from 52 finance leaders around the world, and they're sharing really important information of what they're seeing with their female investors and what they're investing in and why they're investing in it. So it's just a fountain of information and knowledge. And one important part that I put at the end of the paper that occurred to me, sometimes people don't even know how to invest in alts because
Mhm.
unless you're an ultra high net worth investor, you might not have an advisor even talk to you about this at all. So where do you go? So there was a really interesting short video by a firm called Yield Street out of the US, and I included a link to it in one of the back pages. And it's basically, how do I buy alts? And it's one of those lovely women on camera walking you through the 5 easy steps of how you actually buy it, because that's part of it, right? How do I go about it?
Sure. Great. Um, Look, I know as the researcher, you always make the story about your research and your participants, but you have an interesting story, and I would love to know how you define yourself as an investor. Like, what's your profile as an investor?
I would say I'm boring but smart. And if I can be both, that's how I define myself. I am a chartered financial analyst, and so I've done a lot of reading, obviously, in that curriculum, and all of the different books about random walks on Wall Street and all of that. And so I can't help but have had that affect me. And so I really invest with time in the market, right? So that I'm not going to be worried about short-term fluctuations or anything of that nature because I'm really well educated on the data behind that. And also on a personal level, I grew up with traditional British parents where my dad was sort of the guy that handled the money and my mom was the housewife. And I watched their different investment approaches because she kept some of her money separate. And my mom always had her money in Canada savings bonds, even when interest rates were really low. She didn't care what interest rates were. And my dad always speculated with all his money just because he loved stocks and he loved talking about stocks. And kind of sad story, my dad ended up like losing a ton of money, putting all his money in, actually it was Barrick Gold or American Barrick at the time, before he passed away, because he just thought gold is it. And he was, he still had all his faculties, but he still had too much bravado, if you will, around investing, which did not help our family, future nest egg. And my mom just held on to all her money. It grew slowly, slowly over the years. She ended up doing way better than he did. So I sort of feel like I'm in the middle of that for good reason and
Yes.
just kind of boring. Yeah.
Well, and I can't help but think how much that experience must have informed your work. That, it's the difficult experiences in our lives that are real growth opportunities and give us a chance to make meaning and to help others, which is what you're doing.
Definitely. It's so personal at the end of the day, right? Or why would
Yeah.
you have, why would you have such passion to try to change a narrative on something without something in there that, you really, really need to prove?
When you talk about boring but smart and holding for the long term, it makes me think of Warren Buffett's quote. I know everyone loves to quote Warren Buffett, and I'm sure I'll butcher it, but it was something about, if you're not prepared to own a stock for 10 years, then don't even think for 10 minutes about owning it. And it
That makes
seems to
sense.
be,
He always
yeah,
has the best quotes.
he does. I know, I know. Um, well, this has been great. I do want to ask you because I follow you on LinkedIn and you're here, there, everywhere. You're in Sweden, you're in Asia. I'm talking to you now in France. Did you set out did you sort of have this vision for what you wanted your life to be and then built your business to achieve that? Or did you just follow the research step by step and it's mushroomed globally?
I think it's twofold. It was the latter. First of all, I followed my need to correct the situation and do that first research report. And it was only through the encouragement of readers, specifically the NASDAQ in Sweden, who asked me to present that first research report to 2,500 women at their ladies' night at the exchange. And then it went so well, and they were all like, super into gender equality, of course, but they liked the positive messages of that first research report. So they sent me to various cities in the Nordics to copy paste the same event. And there were tons of younger women there. And this was just when they were getting started with all the different platforms for sharing investment portfolios and online stuff. I mean, it isn't that long ago. This is 15 years ago. And then CFA Institute decided they really liked the messaging as well. So they sent me all around the world to all these different countries. So I did it first out of, just pure need for this research. And then my lifestyle changed according to demand and enthusiasm, frankly, to the point where I wanted to. I did resign from my portfolio manager role in 2016 so that I could focus on this particular area of research, which is just blossoming, and it's just a beautiful thing.
And it's so fantastic. And I love talking to people for whom the work really is a mission and a calling. So thank you for doing that work. And thanks for doing this podcast. Just the last couple of questions, as you know, are ones that I ask every guest. Listeners enjoy just sort of a glimpse into how people think and feel about money. So our little lightning round, if you'll bear with me, how would you finish the sentence? To me, money is.
Freedom to do the things that I want to do, such as my research, which is what I'm spending my money on. So yeah, it's completely freedom to live the way I want to live.
And lastly, what is one thing most people don't understand about wealth until they have it?
I don't know if I can answer for most, but in my experience, oddly, when I was a portfolio manager, I had more than one client win the lottery, sometimes big numbers too. Maybe I was a good luck advisor. I don't know. But I'll never forget having a meeting with one client after he'd won a huge amount of money, and he showed up at the restaurant in the Hazelton Hotel where I'd invited him wearing like incredibly expensive clothing. And it wasn't his personal style before then whatsoever. He looked like a different person. And we had a very stilted lunch conversation. He had sort of was different. He was interviewing different investment advisors, even though he was already a client with my firm because he had way too much money now. So he might split it up or he might not. And he had big
Right.
decisions to make for sure. And his life changed. About a month after that, when my firm ended up getting a lot of that money, which was great, he ended up sharing with me that he and his wife had gone back to wearing their like track pants and stuff because they both bought all these super expensive clothes and realized that just wasn't them and they were trying to find their way. And
Yeah.
so it really taught me a lot. They're just such lovely people. And I think, getting a lot of wealth, people have to grapple with that situation. And what does that even mean? It's a big thing. So I guess clothes don't make the man, as that expression And I saw that firsthand, and I was so happy that they could come to terms with that. They didn't have to wear these clothes that didn't suit who they were.
A big thank you to Barbara Stewart for joining me today and sharing her insights. If you'd like to dive deeper, I highly recommend downloading her latest paper, Women and Alts, A Global Perspective. And you can find it at the Rich Thinking website. It is thoughtful, global, and well worth your time. You can also find a link in our show notes. And if you enjoyed this conversation, you want to hear others, please follow Serious Coin wherever you get your podcasts and consider leaving a review. It really helps others to discover the show. Thanks so much for listening, and see you next time.
Serious Coin is provided for your general interest only, and nothing we discuss should be taken as investment, tax, legal, or professional advice. Always talk to a licensed professional before you make any financial decision.